All right, traders, welcome to your weekend video, and we're going to be going over a lot of things in this video. We're going to try to go through it quickly so it's not that long of a video, but basically we'll go through the technicals of the major indices really quickly, and then we'll go through where money went in terms of U.S. sectors and ETFs as well as international areas, which I think is you'll see some pretty interesting facts that will come upon here, and then we'll go over the aggressive option flow and really show you where some of the momentum and again where that aggressive action has been going over the last week, and we'll break that down by sectors. All right, so. First things first, let's go over the technicals in the S&P. I'm not going to go through this in each index because they're kind of very similar looking. So S&P, we are overbought. I think that's the major thing to realize here, and the fact that we've been in an upswing. So with this price action starting in the beginning of the year, we've basically just been up and to the right. I don't know when that's going to when the price is going to start to duck under the short-term moving average, the yellow line on my chart. That's the five-period moving average. Until we really start to duck under here, and that could happen any day. I think for now you want to just remain in the uptrend and just continue with what you're doing, and until we have a change in trend, which we just haven't had yet. So trying to anticipate that has been a difficult game, and it has not happened yet so far this year. So we'll wait and to see when that when the line gets broken there in terms of that yellow uptrend line. Again, 5-period exponential moving average. So that's really the only thing to look at in the major averages, is just that we've been moving up and to the right. We've been overbought now for a couple weeks, and positioning wise, what I've been doing and what I did last week was just position a little bit lighter, knowing that this move is getting pretty mature, but I still want to be in the action, and I want to continue to look for things that have not participated in and that are not really overbought, that could still have a lot of legs left to them. All right, so let's dig into the weekend newsletter. And again, I'm going to go over all the aggressive option activity. This is basically in single names and ETFs. I really don't overanalyze the index flow. There's been call buying, in SPY, in QQQ, in IWM. There's been calls and puts going up. So, you could try to, I mentioned overanalyze again, but I really try not to look at that too much, because it's basically it's a lot of noise. I do want to look at if one favors one, if there's a lot more put buying in the indices or there's a lot more call buying. But it seems like for every couple orders of calls in SPY or in IWM or in Qs, there's been puts as well. And a lot of that puts is portfolio hedging. But I think trying to overanalyze that is really, is a little bit of a time waste, because again, it seems like for every order that you get in the SPY or the Qs on the call side, you get the same thing on the put side too. So that type of just going over that flow too much will kind of leave you out of trades, I think. All right, so let's. I think one of the big themes that I came upon this week is what's been going on in the bonds, and I look at this every day in the trading room. I'll take a look at bonds just as kind of a proxy for sentiment. Just kind of gives you an overall feel if there's fear in the market or not. But what we're seeing at this point is a major breakdown in some of the bonds and a move up in interest rates. So you could look at this in terms. I think a lot of people look at the long bond and they look at bond futures as well. But so TLT is one that everybody looks at. So yes, it is now broken for the last 2 days below the 200-day moving average. That's a sell signal. So I am looking to put on a trade in bonds for this week. And you could look at, instead of buying puts in TLT or shorting TLT, what you could look at is TBF, which is unleveraged, and it's inverse. So the opposite of TLT. And notice that is now above the 200-day moving average. So you have an easy signal here with that yellow line with the 200-day moving average. You could go long TBF, And then if it breaks back below the 200-day moving average, you take it off for a small loser. And for now, let's see how far it wants to go above the 200-day moving average. If you want to use leverage, I choose not to, but you could use TBT. That is the leveraged inverse. So basically, you're betting on interest rates to go up. There's not a lot of difference there right now. It's also above the 200-day moving average. And then what I noticed last week when we saw a little bit of put buying in IEF, which is the 7 to 10 year bond. Remember, TLT is plus 20 years. There's an average duration. They don't just hold 20-year bonds. They have a basket of different bonds, which equate to about 20 years in duration. IEF is 7 to 10 years. Look at this. This has actually been leading the move lower. So you definitely see a breakdown more dramatic than I think what we've seen in TLT so far. But again, what kind of brought my attention, as many aggressive option activity or many aggressive option trades on the tape do, is kind of say, hey, what's going on in this name? Let me go ahead and take a look at the chart. And you could see that IEF, the 7 to 10 year bond ETF, is breaking down here. So besides giving you just a glimpse of interest rates, there's always ramifications if this starts to break down. What does it lead to in equities? Well, a lot of areas that are in equities that are yield plays, such as REITs, utilities, those are starting to take a hit. So if you look at XLU, which is probably the first thing that comes to mind, that has been it has broken below the 200-day moving average, and I think at this point it's an avoid or short. Sure, it could bounce in the near term. Maybe it bounces back up to the 200-day moving average, but now that it's broken, not that I was really long utilities or looking for longs in this space, but it is what it is. They are breaking down along with interest rates moving down. Again, they become less attractive. Some of those areas of the stock market where you would get high yield become less attractive once treasury rates go up, because those are essentially risk-free. I guess you could debate that nowadays, but it is what it is. It's a safer asset than going into an equity. Same thing with REITs. Those have broken below the 200-day moving average, and there's been money that's been being pulled out. So I do have a section in here that looks at fund flows, and if you look at the rotation that's taking place, a lot of money out of utilities and a lot of money out of REITs, and then it's that money is being reshuffled and is going into some riskier places: technology, energy, industrials, financials. All of these sectors are receiving new funds or funds from these groups. Also, consumer discretionary and healthcare also saw a number of outflows, but just kind of gives you a sense of where that money is actually going. And it's really interesting to take a look at these areas, because this is the one place where I can really measure how much money. These numbers are reported the day after trade date, so T+1, and I can go through and I could take a look. So for example, technology saw $983 million of inflows. Where did they put their money in technology? It wasn't all XLK. XLK, I think a lot of people associate that ETF with the sector, but it was actually the BOTS ETF had record inflows last week of $240 million. FTEC, which is a Fidelity ETF, $240 million there, and also semis also saw some money. Just to kind of finish this section, energy also saw inflows despite the little bit of a pullback in some of the energy names last week. They actually saw $791 million of inflows, and you could see here there's a couple different ETFs that saw the inflows, so not just one, which I think is good breadth when you see several ETFs and not just one capture all the inflows. Industrials also saw some more inflows, both in the XLI ETF as well as the aerospace and defense ETF, which saw $219 million of inflows. And also in the financial sector, there's a couple different ETFs that made up those inflows as well. Before I get into, I guess I could get into international here. For the third week in a row, emerging markets, they have really been capturing a lot of money. $2.3 billion dollars of assets captured last week going into emerging market ETFs. So names like IEMG, which saw $1.1 billion, EEM, also emerging market bonds, and also VWO, which we saw a small call buyer in that name last week. Developed market ETFs, mainly when you think of developed market ETFs, it's mainly Japan and Europe. They have had very consistent inflows, running another $1.7 billion of assets gained last week. And ETFs like IEFA and VEA saw those inflows. Also, Japan saw a really big inflow as well. Japan at EWJ added the majority of that $1 billion inflow last week. All right, so there's been a lot of money that's being put to work there. Also, China and Hong Kong, two areas that have been absolutely on fire the last couple weeks. EWH, which is the Hong Kong ETF, I think the Hang Seng has been up 22 out of 24 sessions. So if you think that our market is the only one that's moving, you would be sadly mistaken. I think SPY is up now. I want to say 5% year to date. And I'll just bring up the performance here just to see where we are at this point. Yeah, we're up 5.1%, an awesome start to the year. But, take a look at FXI, for example, the China ETF, up 12.4% year to date. So, and that's the case. I went through and put this out on Twitter this weekend, just looking at all the international areas. If you kind of take an average, I have a watch list of about 50 different names that are both countries and regions in international markets. The U.S. is actually trailing. If you take the average of what all those places are doing year to date, we're actually trailing a little bit global equities. So, and there is an ETF to look at that if, in case you don't want to look at 50 different names. If you want to just look at international without the U.S. in it, you could see that year to date it's up 5.5%. Now, there is some currency effect in there as well, but just kind of goes to show you that this is not just the U.S. market. And I know that what we hear on financial media is about the tax plan and what kind of catalyst that's created, but really this is going on globally. So I think that's just good to have in the back of your mind that it's not just a huge move in the U.S. It's going on globally. All right, and again, that's evidenced by the amount of money that's being put to work there. Gold, believe it or not, is actually seeing a lot of inflows as well. 750 million, $758 million of inflows last week into GLD. So it looks like someone is thinking that gold will continue to run a little bit, and it kind of just goes into the case of just all commodities. There's a all commodity ETF that's out there. It's DBC. You could see that it's had a week of consolidation after a big run. So that has gold. It also has oil in it. And then if you want to see base metals as well, base metals after a big couple weeks of move up is also consolidating here as well. So there's a lot of areas of commodities that are seeing money being put to work. And just to kind of go over that gold chart while we're here, a couple days of big green candles last week, and then a little bit of digestion at the end of the week. So really, I think the level to watch, if you want to look at gold rather than GLD, but I think the level to watch, you can see I've got a downward trend line drawn right around 1350. We are clearly above 1300 now. That's where we stalled out before. And I think that would be interesting if that happens. And I am long based on some aggressive option flow that we've seen in Newmont and in PVG. This is a name that we've seen probably about 3 different days. We saw call buying in. This is a gold miner that's been consolidating, but they've been buying calls in it. So I would keep an eye on this name. In terms of the overall flows in gold miners, there really hasn't been that much anything out of the ordinary. It's mainly just been in GLD in terms of the ETF flows. All right, and then finally fixed income flows, and then I'll move on to the option activity from last week. But not too much in the treasury market. It's been more in international ETFs and in the high yield and corporate ETFs which are seeing the outflows. So in international bonds, just a lot of inflows. There's an ETF that captured $707 million of inflows last week. That's BNDX. And then also a lot of emerging market bond ETFs that are seeing inflows. EMB, EMLC, EBND. And that's been a number of weeks where EMB and EMCL has been seeing some inflows. In terms of in the U.S., the high yield bond ETFs, HYG, if you kind of look here, this is the five largest flows for the week, both inflows and outflows. And you could see there's a lot of corporate bond ETFs that are on the top of the list. HYG was the ETF that saw the biggest outflows last week, $1.2 billion outflow. And then LQD, which is investment grade corporate bonds, also saw $1.1 billion. And if you look further down, J&K is also on the list. So like I said, not a lot of movement in terms of fund flows for the Treasury ETFs, but a lot of other areas, such as the utilities, the REIT seeing outflows, and also the high yield bonds and corporate bonds that are seeing the outflows. So interesting that those are the areas that are seeing the outflows and not the Treasury ETFs, which again the move originates there. All right, so that's the fund flows for the week. Let me go into some charts that I think are really interesting for this week, and it goes right into where we're seeing the call buying. But first, before this one did not see call buying, but really interesting. This is an ETF called TOK. So big inflows last week, and we've seen this a couple times. You could see these bars here, which indicate big volume, and then whether or not it's an inflow or an outflow. And you could see last week there was a big inflow into this, $171 million. And I would imagine it's just one player who's doing this, but you kind of think about, as I always do, what's their motivation for going into $171 million at this point in time? Well, I think you may find a little bit of a clue if you look at the top holdings of the ETF. You have Apple, Microsoft, Amazon, Facebook, Google. You have to add up the GOOG and the GOOGL, but you can see that if you add those two together, that would probably be what the second biggest weight in the ETF. Notice, none of those names have reported earnings yet, so it could be a little bit of a savvy way to get exposure to this group before they report earnings, rather than just play the individual names. If you can't figure out which one is going to outperform on earnings, maybe you just own the whole group, and you could do that, I think, through this ETF. There's a lot of other names in this ETF, but definitely the biggest weightings are those FANG stocks. So I think a notable flow from last week. And then where I think we saw a lot of action last week and big outperformance, the semiconductors. The semiconductors were actually the best performing group last week, up 4.9%. So this is a group that hasn't really been, hasn't really seen major outperformance so far in 2018. But it definitely woke up last week. It was the best performer. And I think what the catalyst was for that is a couple names that reported earnings last week, ASML and TSM, two names that had really strong earnings last week. And I think off of some people's radar a little bit. This is the chart of ASML, and it had earnings and it launched higher, and then it kept going throughout the week. And then Taiwan Semiconductor, also a name that may be off people's radar, also had really strong earnings and saw call buying after they reported earnings. So this really gave a nudge to a lot of names in the group, and we saw a lot of call buying in this group, which we just haven't seen probably in months. Names like Teradyne, Applied Materials, CLAC, and then Lam Research, which also reports next week. And what I included was all the names that report next week that are in the SOX index, the semiconductor index, and you can see it's a big week for the semiconductors. Texas Instruments starts. You also have Xilinx in there. I mentioned Teradyne already. Maxim, MSCC, Intel, and CLAC also report. So a lot of positioning, it appears, going into some of these earnings reports. Interesting, one of the names that we saw a lot of the call buying was Applied Materials. They don't report until the 14th of February, but it looks like there's some positioning. Applied Materials was one of those names that really got a boost after ASML reported, as well as Taiwan Semiconductor. So I was long February calls in Applied Materials, actually before we saw the call buying, and then once we saw the March call buying in this particular name, I substituted out of the February calls and went into the March. So I think it's a nice way to, if you're bullish on this group, and if you think that they're going to have similar reports to what ASML did and Taiwan Semi did, then I think that's a nice way to position within the group, and also paying attention to the aggressive call activity, which this definitely, as you can see, is a name that they went after last week. And looking at the charts in some of these names, some of them are at 52-week highs, just like the names that reported. Some of them are not. So they're not depressed any longer, but they could definitely, I think, hit 52-week highs if the results come in just like we saw with those two names that reported last week. All right, so that's my favorite of the group. But there's a couple other names that I included in here with some charts. Lam, which reports next week, I think will be an interesting name. CLAC also saw a $500 million premium trade last week that I followed and subsequently got out of just because it's a lot of premium for the February calls. You could see they bought those for 440, so that's a lot of premium for a front month trade. So that's really the only reason why I decided to get out of that trade, and I just have other ways to kind of play this group. And then we'll look at earnings trades once, right before those names report. Intel reports, they're one of the last ones to report next week. That name is still underneath the 50-day moving average. I've got a nice arrow there to say watch for that for a buy signal. All right, so I think that is really one of the most interesting groups of last week. Again, had the outperformance. But just to kind of give you a sense of where some of the other call buyers were last week, the Chinese Internet ETF. This is an ETF that I've been tracking for a long time. Very, very strong group, and saw really big option play last week, going all the way out to May. So I did not take this trade. I'm already long a lot of, or have decent exposure to China, so I didn't want to add another layer to it at this point. At this point, I'm waiting and watching for a pullback. I've said this before, and I've said this in other videos. I said it in the trading room. A lot of times you can get into some of these trades for cheaper than what you see on the tape. So that's what I would be looking for, and just being a little bit patient. And if we do see some type of a pullback, this is a name that I will definitely be going into. And then we saw very similar to that, another group that's extremely hot right now, and this was in the newsletter last weekend, is the European financials. It's EUFN is the ETF to watch. Again, super, super hot right now. I think the RSI is almost an 80 on this right now. So again, I've got a couple single names on in here. I'm long Credit Suisse, I'm long Deutsche Bank, but I would get more overweight this group if we see a little bit of a check back in terms of performance. Again, they're going out to July, and this is the option activity that I really like because, first of all, it's a big order. It's $1.7 million of option premium that they're putting down. This isn't some weekly small play that they're looking for a couple days of momentum. They're going all the way out to July, so you have plenty of time. You've got plenty of wiggle room, and again, you may be able to get into this trade for cheaper than what we saw on the tape. All right, so that's what I have in the newsletter. But in terms of other names that we saw aggressive option activity in, so I try to put together a pretty detailed list. Not to say I want to get into all these names, but just to write them down so that if we see that repeat activity, we know that there's something interesting going on in the name. The financials, considering I was just talking about the semiconductor earnings, most of the financials have reported now. I always like to see what names people are buying after they report, after we have the data point, and after the earnings call. I like to see what players are going into after we have all that information out. And I think Morgan Stanley, Bank of America, were the main ones. Also Wells Fargo, which we continue to see longer dated positioning both in July and September in Wells Fargo. Morgan Stanley was next week's calls as well as February calls. But those are the names that I think that I'm most interested in the space. Morgan Stanley, you could say, had a huge day on Friday, day after, I think the day after earnings, was it? Or 2 days after earnings. I think 2 days after earnings. But clearly, this one seems to be the leader out of the group. J.P. Morgan, there was a smaller play in this one, but also in a nice uptrend. BAC, we continue to see the same type of flow that we always see in Bank of America, really short dated stuff, but aggressive. So a lot of like small bites, but consistent in Bank of America. All right, so those are the names that I think are really interesting. If you want to go into the financials group, I tend to always stick to the names that are seeing that type of call buying in. Consumer names, you could see kind of a hodgepodge of group here. I've got some consumer staples names in there. Pepsi jumps out at me. That's a name that I've been long now for about a couple weeks. Started to really catch some upside moves towards the end of last week and jumped out to a 52-week high on Friday. Let's see if we just have a MACD crossover that's developing here on the bottom of the screen. Hopefully that is an indication that there may be some momentum here to the upside. But again, a name that we've seen now for the last couple weeks, some call buyers into. The casino names, really, this group has been really hot. Win reports Monday morning, so we'll see what kind of information that we get out of them. But Las Vegas Sands, MGM, and MLCO saw a really big block of calls that went up on Friday. And you could see that was 13,000 of the February 30 calls. They report, so it looks like that's going to cover their earnings announcement, those Feb 30 calls. But you could see, not a small trade, $975,000 of premium. And again, as not the first name that we've seen the call activity in. Las Vegas Sands and MGM really look pretty strong technically. I myself am in MGM after taking half the position off on the breakout in MGM. Oops, that's the wrong symbol. And you can see I've got a trend line here. So, I think this is a good example in this market as we led off with the SPY chart and saying it's overbought, it's in an upswing. So you start to look for names that have not really participated in the rally yet and have coming out of a big sideways base. So I think MGM is one of those names. So taking half off here on the breakout and then looking for some more upside here, I think is the right way to play it. If it happens to check back to the breakout area, that would be where I would put my position, that half the position back on. All right, so so also a lot of tech names. We talked about most of those. A couple other names that have seen call buying. PayPal has been ridiculous. PayPal continues to see call buying. Yandex, a new name on the list. That one saw some small call buying from last week. Sorry with the alerts here. ServiceNow, NOW, also some call buying. And NTES saw a call buyer before the Goldman upgrade came out. Energy was kind of quiet last week. We did see a few plays in that group. PSX, which I've said for a while now, is the best looking chart I think in the energy space. Just continues to go up and to the right. And positioning in this one. So again, one of these names that has been on a nice run. You could basically start a new position here, again as a starter, or wait for a pullback, which is my philosophy in this name. I was long that name for about 2 months. Got out of it about a week ago, maybe a little bit too shy before. A couple of material names. We talked about PVG, FCX, which report next week. Saw a lot of heavy call buying in February mostly, and then some in March at the end of the day on Friday. So some interesting positioning going on ahead of earnings in that name. Biotech names kind of small. Some names that we've seen before: Fold, AbbVie. GSK probably new on the list. Industrial ZTO. Some other names on the list: Bots, the robotic ETF. This has been has had a huge move, but again, similar to KWEB that I pointed out in the charts, as well as in the EUFN, running really hot right now. So someone's looking for it to go higher. This is a name that I'm long in cash. I think we covered most of what I want to cover. Disney, not a name that I've looked at. So again, these names, we'll see option activity in the name, and it really kind of alerts me to take a look at the name and maybe set up a trade idea. What I'm looking for in Disney is for a move above this downward trend line. So not yet, no trade on this one, and I'm waiting for this downward trend line to come back. ILG, another hotel name that saw some call activity. SGMS, another casino and gaming name, saw some call activity as well. So again, a lot of names, and I'm not going to go through them all. I think the last one that I'll show you, which we didn't see call buying last week, but the week before, is Restoration Hardware. So now above the 50-day moving average. So again, another name that really is not overbought and has not really participated in the last couple weeks. There's some good paper in there, and that's a name that I'm watching for next week. All right, so that's it for today's video. I thank you for watching. Yeah, we're just about a half hour, which again, it's tough to go through these quick. There's a lot of information and a lot of moving parts. So if you are looking at seeing what we do on a day-to-day basis in our analysis, you can email info@Tribeca Trade Group, and I'm happy to provide a week trial, and you can see what we do on a daily basis. Thanks so much for watching, and have a great weekend, and enjoy the football games today. Thanks.